This is Right on the Money with Tom Mosley, founder of Mosley Wealth Management.
Our mission at Mosley Wealth Management is to help people make sure they never run out of income the rest of their life and they pay as little as they're legally required to pay in taxes.
Since 1995, Tom Mosley and his team have been creating comprehensive, custom financial plans to help you preserve what you've earned and pursue what you've envisioned.
In retirement, a lot of people have built a great lump sum. We call that your lumberyard. But you need a blueprint to put that lumberyard into a plan that you can build a retirement house to live in.
What's on your mind this week, Southern California? The stock market, taxes, inflation, income, Social Security, how to ease into the life of your dreams? Let's discover conservative financial strategies starting right now. This is your Right on the Money Radio Hour with Tom Mosley.
And a very happy weekend to you. You are listening to Right on the Money with Tom Mosley. He is the CEO and president of Mosley Wealth Management based right here in Southern California. And I'm your host, Kristin Oakley. Each week, we are committed to providing you with retirement planning solutions. And one of the things we love to do is provide solid financial education on all the different types of products and financial tools that are available to you. And Tom, we're going to have a really fun discussion today. I'm looking forward to it. How are you?
I am doing well, and it's always good to be with you on the show, Kristin.
Well, thank you. Likewise. And as we get into this discussion, it's important to kind of preface it by saying that there's so many different financial tools out there, and we want to provide a balanced discussion and talk about all of them. The good, the bad, and the ugly, if you will, right?
Right.
And that means that we need to talk about one of the most prevalent tools that exists, which of course is the A word, which is
Annuities.
Annuities.
Yeah.
Yes.
Yeah, there we said it.
We said
We
it.
said the word. Let's discuss it, okay?
Yes. Don't change the channel, right?
I think sometimes saying the word annuities, and there are many of you who are listening, and you probably look like right now you just sucked on a dill pickle and you got that frowning face on your look on your face, or maybe you're even turning the channel, but give it a chance here.
Mm-hmm.
It's almost like the word mother-in-law or the word IRS. It normally doesn't carry a good connotation, and it's just something that's out there that there's a lot of people who make, by the way, a lot of money saying they hate annuities. And what was really funny was the major guy who does that with his investments company, it was found out about 5 years ago, he was the number 4 investor in the second largest annuity company in America. So he doesn't hate them that badly.
Wow.
It's just a marketing tool to drive people away. And one major reason that, I've often said, call it a 𝒊𝒈𝒉𝒕, okay?
Mm-hmm.
One major reason that people don't like annuities is you don't need the idea of principal protection necessarily when you're 25 years of age, and you don't need income. And those are two of the biggest selling points of an annuity when it comes to retirement. When you're 25 years old, you need to put your money in the market and let it grow. There are going to be ups. There are going to be downs. When there are downs in the market and you're 25 years old, you need to be buying more stock because it's on sale. So you might as well buy it at a lower price, because at least historically, we can't always promise anything, but at least historically, the market has gone up and down, but the overall trend has been up since the stock market started way back in the late 1800s. So you've got to understand that when you're 25 years old, put your money in the market. You don't need the principal protection so much. And for income, when you're 25 or 35 or 45, you need a job. You don't need some vehicle that's going to pay you guaranteed income for life. Now, you say, well, explain that a little further. Let's talk about pensions, because a lot of people who say and tell me they hate annuities love their pension and they love their Social Security. Well, what kind of Social Security is a normal person going to get at 25 or 35? Nothing. Why? Because it's built for old age. It's built for when you do retire. What kind of pension is a 25 or a 35-year-old going to get? Nothing, because they need the job for the income, and they build that pension over a period of time. Well, guess what out there? Pensions are backed up and supported by a financial vehicle called annuities. Okay.
Mhm.
So everybody loves their pension. They love their social. They don't like the annuity. So make sure you get that clear. They're all the same thing.
They don't
They're a
realize that those are actually annuities.
they
That's the
are
bottom line.
annuities.
Mhm.
They're products or investments or programs that give you a guaranteed, sometimes increasing income for as long as you live, and for as long as, if you're married and you take the distribution the right way, it could impact your surviving spouse for as long as they live, with Social Security, pensions, and annuities. And after they run out of the money that you paid in for all of them, they keep paying you money for the rest of your life. So let's solve that issue and say, I really hate annuities. The problem is a lot of insurance guys that only sell insurance, or insurance
Mhm.
ladies that only sell insurance, they can't sell investments.
Right.
I don't know whether it's you're out there and you can't pass the test, which is pretty hard for investments. It's much harder than the insurance license. And I don't know if you've got something in your background that they won't allow you to sell investments, because those are two things that they do scrutinize. But
Mhm.
an insurance only person never saw an annuity they didn't like. So they'll put a 25-year-old in a variable annuity. They'll put a 30-year-old in a fixed indexed annuity. And it's just, in almost all cases, you always have to have a little bit of a loophole. There's almost all cases that's not a good idea, because you don't need income. You don't need principal protection when you're in the accumulation phase. But when you do retire and you walk out that door of that building, the one thing you don't have anymore, unless your name's tied to the building or you have a pension, you don't have a paycheck.
Right.
And that's where an annuity is a self developed and a personalized pension plan that you can build for yourself.
For your own no-cost retirement blueprint, call Tom Mosley of Mosley Wealth Management, 888-930-5609. That's 888-930-5609.
Well, I want to go back real quick, because to your point, a lot of times annuities get a lot of bad press. And you mentioned a certain individual who has made a lot of money off of telling people that annuities are bad, and yet they are investing in an annuity company. Can you help our listeners understand the connection between why someone would tell someone else that annuities are bad?
Well, they talk about annuities sometimes, and there are some negatives about annuities, and we'll get into those later in one of the sections, because you
Right.
need to know what you're getting into. But any product that's out there, Kristen, has its good and has its bad.
For sure.
And that not every product that's out there, if you're listening to us today, there's not every product out there is great for you. That's the reason when we start working with a client or a couple, that we sit down with you individually or the two of you, and we go through everything you've got. We go through what you're going to have for income in retirement, what's your risk level to know whether you want a lot of principal protected or you're okay with the market and the market risk and all of that brings to you. We sit down and we find out who you are, because different products apply to different people. So it's
Mhm.
really important that you understand that annuities are not for everybody, but annuities, and they hang out their fiduciary standard. Now, let's get something straight. We are fiduciaries by license at Mosley Wealth Management. All 6 of my advisors are licensed fiduciaries. And that means that we have to do what's in your best interest when it comes to investments.
Mhm.
Now, we're also insurance licensed, and no one is technically a fiduciary operating in your best interest by law when they sell you any kind of insurance product. You say,
Mm.
aha, I got you there. No, here's the deal. They talk about they don't sell commission product. And that's why they are not a true whole hearted, complete, wraparound, holistic, comprehensive, all the names that they use for a real financial advisor that touches all the base. Let me explain what I mean. What if you start financial planning 10 years before you're about to retire and you've got $600,000 worth of debt? And you probably need a term life insurance policy to cover that in case something happens to you before you get to retirement or you get it paid off. Guess what? Nobody that sells you a term life insurance product is a fiduciary when they sell you that.
Mm-hmm.
When you turn 65 and you decide to get on Medicare, and instead of taking a chance with a person who might call you, you go to a trusted financial advisor and they help you get on Medicare Supplement or Medicare Advantage. Guess what? They are not a true fiduciary when they sell you that product. If you buy long-term care coverage, you say, oh yeah, that's really important that everybody address in financial planning. Absolutely. And when they sell you that product, it's an insurance product. They are not a fiduciary. So let's sort of throw that misnomer out. Investments, you need to be a fiduciary. We are fiduciaries. But with insurance, no one is a fiduciary when they sell a commission product. Now let's talk about a company that says we don't sell commission products. That means they can't do a one-shop fits all, stops all, covers all, holistic, comprehensive plan because they're not going to be able to cover your Medicare. They're not going to be able to cover any life insurance needs you might have. They're not going to be able to cover any long-term care insurance needs you might have. They are strictly and by name only an investments company. So let's make sure we understand the real playing field and do a little defense ourselves to say sometimes if you don't have a pension and you don't have enough Social Security and you want your income to be principal protected and guaranteed for life you want to pass that risk off to an insurance company, perhaps an annuity is something you need to consider. Now what we've talked about in this segment, we've gone a little deep on the justification for looking at an annuity. And you need to understand, according to Investment News, 36% of all plans that are designed by a professional for a retirement blueprint is what we call it, include an annuity. So not all, but 36% of them do. Last year, $385 billion went into principal protected annuities, according to a recent LIMRA report, LIMRA, from the life insurance and insurance industry. So look, you need to look at all your options. You don't need to be locked into a box because the person you're working with doesn't like some product. You need to decide what you need to decide.
Well, and we're going to get more deeply into this because not all annuities are created equal. And I know we have to talk about the pros and the cons. And so we have so much more to get into today. But if you're listening and you're going, you know what? I've never thought of it this way. Maybe you are in need of your own personal pension and you want to work with someone who you know has your best interests in mind, who can look at all the different financial tools out there and see that would be right for you. We encourage you to pick up the phone and call the team of Mosley Wealth Management, 888-930-5609 to schedule a time to receive your very own complimentary retirement blueprint. Stay with us. More here at Right on the Money after this. Do you know how you'll generate income from your investments along with your Social Security in retirement? In our opinion, it's never too early to start the income planning process for your future. An income plan can help you work towards creating a steady stream of income to support you throughout your retirement years. Don't leave your financial future to chance. Take control today and start income planning for your retirement. Call the team at Mosley Wealth Management so we can help you design a complimentary written income plan to help you live the retirement you've always wanted. Call 888-930-5609. That's 888-930-5609. Welcome back to Right on the Money with Tom Mosley. I'm your host, Kristin Oakley, and today we are having a very important conversation about one of the most misunderstood, misrepresented financial vehicles and tools that exist to help people create security and peace of mind in retirement. We're talking about annuities. And I just want to represent, Tom, that stat that you shared towards the end of the last segment, that in 2023 alone, over $1 billion in annuity sales happened. In fact, $385 billion. So I think a lot of people, and correct me if I'm wrong, but have flocked to wanting to protect their retirement income, especially in the wake of what happened in the stock market in 2022.
Well, what happens, Kristin, is this. People are flocking to annuities because they don't have pensions anymore.
Right.
There was a time, and think about the statistics. 47% of all workers had pensions at one time. That was about 50 years ago. Now let's put some things together historically. 50 years ago, not all families had two of the family members working outside the home. So if you eliminate all the ladies generally who stayed home, sometimes the men stayed home, but if you eliminated that spouse that stayed home and 47% of all people working had pensions, it's been guesstimated that 71% of all people that were adults had some kind of coverage for pensions, either themselves or their spouse. So if 71% had coverage, and then along in 1977, 1978, we had this fantastic program that added to all of our pensions. It was called the 401k, the 403b, the 457s, and this big 𝗍𝒂 retirement program came into effect, and we started contributing our own money, a defined contribution plan, rather than the pensions, which are defined benefit plans. So what's happened over a period of time is companies have said, wait a minute, why are we giving them the benefit and we're contributing to their 401k? So now the portion of people that are covered by pensions is well below 20%. And most of those are governmental employees like city workers, county workers, school teachers, and those kind of things. And I jokingly call it here in Southern California, STRS, PERS, MERS, DERS, because they've all got that employee retirement system down at the end, ERS. And so they call them OSERs and LACERs, and literally they're names for almost all of those. So only those governmental pensions are generally out there anymore, or union pensions. So it's gone from like 47% of the people were covered, maybe 71% of the people were covered, to now most of the time with a 2-member household out there working, both spouses working in the workforce, down to less than 20%, 16, 17% are covered by pensions. So the reason annuities are becoming popular is, like we talked about, they give you, like a pension, a guaranteed, in most cases, increasing income for as long as you live, and it will then last as long as your spouse lives if you put it in the right product. Even, this is the kicker, because this is the insurance aspect of it, even after you run out of your money. If you put your money in an IRA down at one of the big box firms, and you're 81 years old and you run out of money at 81, which is the major time people really get to an absolute fixed income if they do run out of money. So if you get to 81 years of age and you're out of money at one of the big box firms, and you go knock on their door and say, hi, I'm Tom. I'm out of money. I'm 81 years old. I'm still healthy. Is there anything you can do to help me? They'll say, just a minute. And they'll go to the phone. Hello, Anaheim Police Department, Scripps Ranch Police Department. We got a crazy person out here who wants money, and they're out of money. Okay. But in a pension, in an annuity, in Social Security, they are all built to pay you guaranteed increasing income for as long as you live, even after you run out of your money. So that's why people love it. They love the principal protection of, hey, in some of the annuities that are out there right now, you can make really good money, 8, 9, 10% historical 10-year records in some of the investments. So they run to them for the principal protection. So there's a lot of motivation people have for being in the different kinds of annuities.
And to your point, and you mentioned this earlier, annuities aren't for everyone. It has to be suitable. It has to be the right tool for someone to use based on their individual situation, but also it has to be the right type of annuity. And there's several different types. And we need to talk about that because I think sometimes the reason all annuities get a bad rap is because of one particular type. So let's go through some of the different types and help our listeners understand what they need to know about them.
I think sometimes, Kristin, it could be likened to going to a restaurant for the first time,
Mm-hmm.
and you take a chance on ordering something because you've never seen the menu before,
Right.
and you order something that maybe your kids and your wife or your husband or the person you're with, if you're single, and you order something, they love the restaurant, you don't, because you ordered something that you just didn't like the way they prepared it, you just didn't like the
Mm-hmm.
way it was fixed, you just didn't like the texture of it or whatever.
Right.
Okay.
Yep.
So you never go back to that popular restaurant again. Well,
Mm-hmm.
wait a minute. If so much money is moving into annuities by retirees, but you've taken a chance and you've learned about one plate that they offer, okay,
Yeah.
one type that they offer, and you've made a decision based on your one experience or maybe your parents' one experience. I'll tell you what the experience that most people have whose parents have annuities. My mom has an annuity. I've heard this scores. That's 12 times, many, many times 12 in the 29 years of me doing, financial planning, doing financial planning. I've heard so many people say, my mom has an annuity and she loves it.
Mm-hmm.
And I always say, how old is your mom? How old is your dad sometime? Well, they're in their 90s.
Mm-hmm.
And how long have they been drawing from it? Well, mom's been drawing from it for 20 years, 25 years, 23 years, 21 years, a long time. And how long is it going to last? It's going to last as long as she does. And she's already out of money. She's already gotten more money than she ever put in or it ever grew to. That's the insurance aspect of doing it through an insurance company as opposed to the investment company. The investment company, you're out of money, you're out of money.
Right.
An insurance company, they're insuring you against the risk of longevity, of living too long.
Mm-hmm.
Okay, I told recently on the program, maybe 4 or 5 weeks ago, the story of a 73 and a 75-year-old couple that I've been working with for about 9 years. They were in for their annual review, and she kept looking at her watch. She kept looking at her watch. And I finally said, do you guys have somewhere to go? And she said, yeah. Remember, they're 75 and 73. She said, we've got to go take care of his parents.
Yep.
I said, how old are his parents? They're 96 and 93, and they're still alive.
Mm-hmm.
Well, there's longevity in those genes.
Yep.
And that is another motivation, not just the principal protection, the guaranteed income, but the longevity that you might have if your parents have lived for a long, long time. They'll never run out of money with an annuity. Now, we've been trying to get in and talk about the different kinds. Let's talk about the kind you might have been exposed to and the kind that might be out there that you might not know about. There's what's called SPIA, S-P-I-A. That stands for a single premium immediate annuity. That means you pay one time and immediately you start getting an income. It's like winning the lottery and taking the 20-year payout.
Right.
Okay?
Mm-hmm.
Because you get a payout for a certain amount of time. There are MIGAs, multi-year guaranteed annuities. It's guaranteed at a certain rate for a certain number of years. And sometimes you can even add to that through those years and guarantee, like a CD. Only I call it a CD on steroids. A fixed annuity is very, very similar to that. A fixed annuity generally is you put all the money in up front and you leave it for 3 years, 5 years, 7 years, and you generally make about 1% to 1.5% more than you do when you're in a bank in a CD. So they're different kinds of annuities. You say, well, I want one that you talked about for an income for the rest of my life that increases. Well, we use fixed indexed annuities. FIA. They're fixed in that you put the money in up front.
Mm-hmm.
They're indexed. They're tied to the market growth. Now, here's the amazing thing. When the market goes up, you get part of the growth.
Right.
When the market goes down, remember, we've mentioned this several times already on the program, they're principal protected. You don't lose your money when the market goes down.
Which I think people hear that, Tom, a lot of times and think that's too good to be true, right? Do you ever hear that?
They absolutely think it's too good to be true, but you need to check out the products. They've been around for multiple decades, and they're the most popular, fastest growing vehicle for retirement. Again, back to what I've said earlier, people don't have the pensions, so they're doing their own personal pension with these.
And we should mention that the bulk of the sales that happened that spiked in 2023 were in these fixed indexed annuities.
Right, because when you're old, you don't want to have your money at risk like you do in another kind that a lot of people sell to younger people. And there are some reasons for tax purposes. If you're making gazillions of dollars, they're called the variable annuities. But I don't like the variable annuities for two reasons. They're variable, which means you're just up and down in the market. They do have a tax benefit to them. But number two, they have very, very high fees in most of those, sometimes as high as 5.25% or 5.5%. So you can't get any traction because you are paying so much in fees. So there's the SPIA, the single premium immediate annuity, the multi-year guaranteed annuities that are like the fixed annuities. There's the fixed indexed annuities, and there are the variable annuities. So they're all kind of different kind. So which kind do I need? Well, there's one more kind you might need. None of the above. None of the above. How will you determine if you need one of these or none of these above? You need to come in and talk to us. We have 6 advisors, 5 offices: Glendale, Arcadia, Ontario, Anaheim, and Scripps Ranch. We can sit down with you and not just talk about annuities, but talk about your entire retirement blueprint to see if there's a need or a desire on your part to have some of your money principal protected or some of your money set aside strictly for income, to give you that contentment to know the rest of my money I can play with, I can live with, I can live with and go and enjoy my life.
And the first step to receiving that kind of peace of mind starts with making this phone call. Again, that number to call is 888-930-5609. Don't go anywhere. We have a lot more to get into. When we come back, we're going to dive into some of the pros and cons and helping you answer the question, could an annuity be right for you? Stay with us. Are you worried about taxes eating into your retirement savings? By engaging in savvy tax planning, you might be able to create greater tax efficiency in your retirement plan. At Mosley Wealth Management, our team of retirement planning specialists can help you explore tax-deferred and tax-free investment options, as well as strategies to help potentially minimize your tax burden in retirement. Don't let taxes derail your retirement plans. Let us help you create a tax-efficient financial plan and work towards maximizing your savings and minimizing your taxes. Call Tom Mosley of Right on the Money and Mosley Wealth Management today to learn more about our tax planning solutions. Call 888-930-5609. That's 888-930-5609.
Can you remember how different life was when you were 10 years old and 20 years old and 30 years old? You could be retired for 30 years or more as well. Imagine the different stages you will experience in a long retirement. One of the biggest concerns for most retirees is running out of money in retirement. If you've never planned for decades worth of income spending from your investments, savings, Social Security, and other resources, you don't want to get it wrong. Actively plan for a successful retirement by working together with a financial advisor whose practice designs these retirement income strategies every day in their firm. Tom Mosley of Mosley Wealth Management devises retirement income strategies for listeners just like you, and it's complimentary to get started. Call Tom Mosley of Mosley Wealth Management and ask for your own complimentary retirement income strategy. 888-930-5609. That's 888-930-5609.
Welcome back to Right on the Money with Tom Mosley. He is the CEO and president of Mosley Wealth Management, and I'm your host, Kristin Oakley. Mosley Wealth Management is based right here in Southern California, and in addition to the television show, the radio show, you also have a lot of live events coming up. So why don't we share with our listeners when and where they can come find you and the team to be able to attend a workshop live?
Hey, you can get a complete list of all of our workshops for the next 2 or 3 months by going to mosleywealthmanagement.com, wealthmanagement.com. Pull down the tab there and look at our events, our seminars, our workshops that are coming up.
And again, this is completely complimentary. So I know you're looking forward to meeting more folks and getting to see people in person for sure. Well, talking today about annuities, and really now in this part of the show, we're going to help address some of the questions that I know you commonly get. Is an annuity right for me? Could an annuity be right for me? If so, what kind? What are some of the pros and cons? And really, let's start with, how do you help someone determine how much of their retirement assets should go into an annuity if it is in fact right for them?
Well, just to be straight honest, I'm not here to be I'm here to tell you the truth. Okay. I'm not here to just be a cheerleader for you. I'm here to tell you the truth. And some people, you might not have enough money to go into an annuity. If you have an income need that's pretty significant, and you only have $200,000 or $300,000 saved, you probably don't need to lock that money up into an annuity, because you need access to some of that money, and sometimes it just doesn't work because you don't have enough. Number two, what's your income need? And this is where you have to go in, and when we work the retirement blueprint process, we help you develop a budget as to what you will need for income in retirement. Oh yeah, that'd be crucial, huh?
Mm-hmm.
That's absolutely essential. And we see what your Social Security is going to produce, maybe a pension is going to produce, maybe if you have rental income, and maybe you don't have a need for additional income. And so you might, there again, not need an annuity. But if there's a gap, then we put the money there that will provide for that annuity and for that income. Here's another thing. When do you need it? Annuities, what I call ferment. The longer you leave them in the bottle, the better sometimes. So if you can put the money in earlier and let it ferment and grow over a period of time, those investment companies, those insurance companies that provide the annuities make money off of your money. Hey, everybody does. But the longer you leave the money with them, the more money they can pay you. And then once you know those things, you go to the product selection. Now, if I were to ask you, if you were to tell me you're going to go look at cars, you might buy one, I wouldn't know what kind of car you're going to get. I don't know what make of car you may hate Fords or love Chevys. That used to be the thing. You may hate Toyotas and love Hondas. You may love hatchbacks. You may need a truck. You may need just a regular sedan. So then you go into the product selection, and that's where it can really vary. And I can't give you that over the radio or over the television. You've got to come in and let's analyze and see, first of all, if you need one. And then if you need one, what do you need it to do for you? And then we go find the product that fits that best. So that's how we determine how you need an annuity, if you need an annuity.
Well, and so much goes into that suitability conversation. And I know that you take a lot of pride in being able to sit down with folks and really look at their unique individual situation to see, could it in fact be right for them? And if so, then which one, right? So a lot goes into this for sure.
Get your retirement right on the money with Tom Mosley. Call 888-930-5609 for your no-cost appointment. 888-930-5609.
Well, let's talk about some of the advantages and disadvantages. I appreciate that you always want to provide a balanced discussion with whatever subject that we're talking about. And so let's start off with the pros. You've already kind of touched on some, so this will be a little bit of a review. But why might someone want to consider an annuity as part of their retirement financial plan?
Guaranteed income. You put your money in the market does what? It goes up most of the time, but it goes what? Down sometime. So if you're just pulling out on the old Monte Carlo model that the big box firms use, you're pulling out 4% a year. Oh, whoops, wait, it's only 3.2% a year you can take out now in that Monte Carlo model. If you're pulling out a set amount per year and the market goes down 50%, your investments go down 40%, 30%. By the way, when we do a retirement blueprint, we can let Morningstar, a neutral rating agency, tell us how much your portfolio would lose if we go through a downturn similar to the ones that we've had recently. So guaranteed income, if you're just pulling money out, it's not guaranteed because you could run out of money. Secondly, annuities are tax deferred in their growth. Everything within the annuity until you start taking it out is tax deferred. You don't pay tax on it along the way. If it's in an IRA, you never pay tax on that until you start taking money out. But if in that annuity, it's non-qualified money, in other words, after-tax money, you don't pay tax on it every single year. You only pay tax when you start taking it out. So you could defer tax on whatever you invest into the annuity. You could defer tax until your retirement years. Number
Mhm.
3, a lot of them have a death benefit, what's called an enhanced death benefit. Number 4, a lot of them can be, like we talked about just a few minutes ago, they can be customized. What kind of car do you want? Do you want a hatchback? Do you want an SUV? Do you want the truck? What do you want? We can build it and customize it to whether it's fixed, to whether it's in a fixed index, to, do you need income from it? Do you just want it to grow with principal protection? We can put it in there. Many times you can also allow for inflation protection within the annuity, because there's some annuities that offer a rider that give you the option to protect your money in case of inflation, rampant inflation, like we have had particularly 2 years ago.
Mhm.
And the biggest thing, I think, is the principal protection. That and the guaranteed income for life and the principal protection. Those are the biggest things. In the fixed indexed annuities that we like to use, you never lose your principal. It doesn't go down. When the market goes up, you get part of the market gain. When the market goes down, you don't lose any money. You say, what if there was a vehicle like that? That'd be great. Yes, there is a vehicle like that that's backed up by the strongest investment financial companies in the world, the insurance industry. So, and then sometimes, Kristin, and those of you out there, you say, I don't know if I need an annuity, but man, I'm concerned about what happens to the income that my spouse might need if I'm gone. What happens if I go into a nursing home, or I need, home health care? And what happens if I want to leave a little death benefit to my kids? Well, there's some annuities that can do all 3 of those.
Wow.
And
Yeah.
sometimes if somebody's got excess money, and I mean, it's got money that you've got money that maybe you don't need, and you slide a couple of $100,000 into an annuity that, number 1, is there for income in your lifetime or your spouse's lifetime if you're married. Number 2, if you go into a nursing home, or even if you don't go in a nursing home, but you hit 2 of the 6 activities of daily living that you can't do anymore, it'll double the payout for 5 years to help you pay for home health care or the nursing home. And number 3, you say, what if I never need that? Then this annuity I'm thinking about, one particular kind, has an enhanced death benefit. So there are all kinds of bells and whistles you can get on some of the annuities. Those are the pros.
Right.
Okay?
And that really speaks to the customization and why the pros can be really helpful, right?
Exactly. Exactly.
But we got to talk about the cons.
The cons are high fees. I've already mentioned that with the variable. We try to keep fees below 1.25%. Many of the annuities that we place people with have 0 fees. There's nothing that comes out of your money. The company's going to make money because, remember, when the market goes up, you're not going to get all of it, but they're going to have to take that money, make some money for themselves, and ensure against when the market goes down that you don't lose any money. The second thing is, and if you could see me right now, I put my hands together like they're in handcuffs. Your money is tied up. It's illiquid. You can't get to it. Now, some of them you can get to 10% free surrender charge, but most of them have a decreasing surrender charge over a few years. Number 3, a lot of advisors who sell them they sell you something that's complex and they don't explain it to you. And so there's a lot of things that are there, but I think the 3 things that are huge are, you've got to know your fees. You've got to know that it's got limited access, and you can't have liquidity. You can't go get the money if you need it. It's set aside for income, and the complexity of the annuity could work for you, but you've got to understand how it works, and not so much how the watch works, but you got to know what it's going to do for you. You got to know what time it is, and you got to know what you're looking for, what problem you're looking to solve with the annuity. So make sure that if it's complex, you really thoroughly understand it.
That's such valuable points to consider, Tom. And I know you and I have talked before that a lot of times folks have an annuity contract and they really don't even understand what they already have. So maybe you're listening today, you already have an existing annuity. If you would like to get a second opinion, just get a second set of eyes to look at that annuity contract and see if it is in fact in your best interest and help make sure you understand all the complexities of what you currently own. This is a great opportunity for you to do that. You can call this number 888-930-5609. Schedule a time to come in and meet with one of the all-star advisors at Mosley Wealth Management. They'll be happy to sit down with you, go over that annuity contract, answer any questions you have, and you can also receive your complimentary retirement blueprint. More on Right on the Money with Tom Mosley right after this.
Which will you spend more money on in retirement? Food or healthcare? Do you take your investments out of the stock market now that you're retired? How do you know if you've saved enough to stay retired? Will your Social Security check be reduced in the future? How do you produce income from your nest egg to fight costs like taxes and inflation? At Mosley Wealth Management, Tom Mosley and the team take the guessing out of retirement planning by devising a written plan that accounts for all of your concerns. The bigger question, are you going to be okay in retirement? Find out the answers to your retirement questions by calling Tom Mosley of Mosley Wealth Management, 888-930-5609. Income, investments, Social Security, Medicare, longevity, health care. We cover these solutions and all of those other questions on your mind to answer, are you going to be okay in retirement? Call Tom Mosley and Mosley Wealth Management for your own complimentary retirement review, 888-930-5609.
Welcome back to Right on the Money with Tom Mosley. I'm your host, Kristin Oakley, and we've been having a very lively conversation today about all things annuities, making sure that folks understand the different kinds that are out there, that not all annuities are created equal, and that really so much goes into determining if an annuity could be right for you. And Tom, I know we mentioned in the previous segment that, a lot of folks might have an existing annuity contract. This is a great time to review those contracts and see if maybe some tweaks can happen, because with increased inflation, increased interest rates, there's things that can be done to help people be in even better situations with their existing annuity contracts, right?
Absolutely. The environment right now for evaluating and reevaluating even the annuity you're in, but also if you're not in an annuity, it's a great time to look at them. And if you are in an annuity, and no matter how long you've been in it, it is a great time to have it reevaluated, because things have improved drastically. You would never think about refinancing your home right now, or you shouldn't, I hope, because interest rates are so much higher than they were just 3 and 4 years ago. But because those interest rates are higher, everything in money, they're paying more for money right now. Look at the bank. They're paying more for money market, more for CDs. And inside these principal protected annuities, the ones that are being placed right now, they're paying more money for them. So many people are coming to us through this show and through our contact on TV and through the events that we do. And they're coming to us, and as part of an overall program, if they need an annuity, we're finding they're in the wrong one. And in almost all cases right now, if you've had that annuity for 3, 4, sometimes even 2 years, you might be able to replace it with an annuity that's much better for you. Much like the better bells and whistles they're putting on new cars now.
Mm-hmm.
I mean, I've got a car that's 3 years newer than my wife's car, and I'm amazed at all of the computer things that are on my car than were on her car just 3 years before. Mm-hmm. So, there might be something better out there, and if it's better, you can always go to it.
Absolutely. Well, I know you have several real world examples of folks that you've been walking through this very process with. And of course, we always change the names, but I would love for you to share some of these examples, because I think it really helps wrap up everything we've been talking about today.
Every one of the people that I'm going to mention right now, they're clients right now. They've come to us recently. And let's just talk about the first case study. This is a couple that came to us. They came to me and they said, we've got about 10 more years until we retire. Mm-hmm. Boy, let's pause there for a minute. Rather than getting to retirement and pulling all the strings and making all the decisions without professional guidance, please try to start your retirement planning well before you retire. Mm-hmm. I mean, you wouldn't think of going to Europe and waking up and say, hey, sweetheart, let's go to Europe today. Okay. Right. You'd want to plan it. you'd want to lay it out. Now that's a 2-week, 3-week trip. This is a 2-decade, 3-decade trip through retirement. Start planning it early. So this couple came to us. They said, we've got about 10 years before we retire. We would like a retirement blueprint. So in the process of building that retirement blueprint, we found out several things. They owned a business that they were going to eventually sell upon their retirement for about $2.5 million is what it's worth now, probably be worth more in the future. They were at a point where they were going to start significantly saving for retirement because their kids had gotten out of college, the house has been paid off, they're in their lower 50s, and they had about $500,000 in their own name, not in the business name, but in their own name to start saving for retirement. So we went through the process. We built the sketch of what a retirement blueprint will look like in 10, 11, 12 years when they do retire. They love the idea of starting and building a base of their income now. So we found an annuity, a fixed indexed annuity. We put $300,000 of their money in. And as I told you in an earlier segment, that money in that annuity is going to ferment for 10 years. That company is going to have the opportunity to make money off of their money, and they're going to be able to grow that money. And it's got an income rider on there. Listen to this, that even if the market does not gain any money that year, it'll give them a 4% bump.
Wow.
Whatever the market gains in their index, it will give them a 200% bump. You say, why would a company do that? The company's going to do that because they want to keep that money for as long as you live, because trust me, this is not breaking news. They make money off of your money. This annuity also has, listen to this, an ADL rider. That's activities of daily living. If you go into a nursing home or if you are at home and need home health care, it will double the payout for a 5-year period. And this annuity, they don't know how much income they're going to need in retirement. They anticipate needing some, but this annuity will allow them to turn on increasing flows of income up to 10 different times, not all at once, like some annuities. So look at the benefits of the new models of annuities that are coming online. They put $300,000 in that. It's going to cover their income if they need it. It's going to cover their home health care or their nursing home if they need it. And it's also going to give them the opportunity to turn on increasing income for the rest of their life.
That's so amazing, Tom. And to your point, the way you were able to customize it for them to meet their needs. And I know you have shared with me too that your clients that are in an annuity who also have assets in the market, they're not as concerned, right? They don't need to worry whatever the markets are doing because they know that the income's going to be there for them.
Such a crucial point, Kristin. That's why I love you being on this show. You bring up so many things that are important. To expound on what you just said, if you have guaranteed your income increasing for the rest of your life, for the rest of your spouse's life, even after you run out of money, with a portion of your retirement money, we call that your paycheck.
Yeah.
The rest of your money goes into your playcheck. All right. So many people that we run into, and they're already retired when they first come to us, they've been for 2 years of retirement afraid to go do their bucket list, afraid to go do the go-go years things, to take a safari to Africa, to go to Europe, to go to Bora Bora. They've been afraid to do all of those things. Why? Because they haven't secured their guaranteed income for life. This couple had the wisdom when I gave them all the options. We just said, here's an option. They said, we like that one.
Right.
When I gave them all the options, they realized what that would do for them in 10 years is give them the security to when they do retire, when they're in their mid-60s or so, to be able to go do the things they want to do that they're able to do in the go-go years and not worry about running out of money when they're in their 80s or 90s.
So crucial. I mean, there's nothing that can beat having that kind of security and peace of mind that can come from having that kind of plan and that retirement blueprint in place. I think we have time for at least one more example. I know you also work with a lot of individuals who are single. So is there an example that comes to mind of someone who you've been able to walk through this, everything we've been talking about today, and where it's been able to be a viable solution for them?
Let me tell you about a success story of recovery. Okay, we did a show on gray divorce recently, and I used this illustration. But a lady came to me. She's been working with me now for almost 10 years, and she's when she first came to me, she didn't have enough money for an annuity. And she actually, I'll tell you the exact amount. She got a divorce a little over 10 years ago, and she survived the divorce with $38,000 to her name, and she was in her late 40s. She came to us and she said, I need some help in building retirement from almost zero, $38,000.
Yeah.
So we put her on a plan. And I told her some really hard things. Again, I'm not here to just, tell you what you want to hear. I'm here to tell you what you need to hear. And I told her, I said, right now you have no skills. You need to retrain yourself. You need to get a good, viable job. She said, I have no intention of ever getting married again. She said, but I've got to make some money so I can retire. So we put her on a plan. We've worked with her diligently. She came in for her annual review, her 10-year annual review about a month ago, and she almost broke down in tears. She said, I'm so happy that I found a real financial planner. And she said, I'm still 10 years from retirement, but she said, now we have been able to save together. You've helped me save, and we're now at $1.2 million.
Wow.
Because this lady's been able to really dedicate her assets and really grow her assets.
And that's outside of her house that she also owned, right? If I remember the story correctly.
She had just bought a house, and she's making $120,000 a year. And she said, now I'm ready to start putting together that blueprint for sure that I'm going to need in about 10 years. So we went through the process, and she said, why don't I put $500,000 into an annuity so that in 10 years it'll grow to the point where I'll never have to worry about income the rest of my life. So see, wherever you are, we take you, I say on this show, the TV show, we start with a blank piece of paper. Sometimes you call in from out there and you say, send me a blueprint. Send me a plan. Well, we got to know where you are. If I'm going to take you somewhere, I got to know where you're at right now. Okay. And so we bring you in, you meet with one of our advisors in one of our 5 offices, and you sit down with a fiduciary advisor, and we work you through that plan. All the planning is alike, except it all goes in different directions, depending on where you tell us you want to go and where you are right now. And we sometimes we use annuities, sometimes we don't. This show, we've talked about them the whole show, but we use investments, we use other insurance products. We build a plan that's going to give you security and that ability to sleep at night for the rest of your life. But you've got to pick up the phone, call us, come and get on our schedule.
Tom, thank you so much. What a jam-packed session today, full of valuable information. Again, that number to call to receive your very own customized retirement blueprint from Tom and the team of Moseley Wealth Management is 888-930-5609. There's no cost, there's no charge, there's no obligation. It's simply an invitation to have a conversation to see how they can help and serve you. And again, if you need help with an existing annuity contract, they will be glad to review that for you and see if there's a way that you could actually put yourself in an even better situation. Hey, thanks so much for joining us this weekend. We appreciate you being here. Be safe, be happy, be blessed, and we look forward to being back with you next week here at Right on the Money with Tom Moseley.
Tom Moseley and the team have helped thousands of folks like you in Southern California plan for their retirement. Now make the call yourself. 888-930-5609. That's 888-930-5609. Investment advisory services offered by duly registered individuals through Moseley Wealth Management Incorporated. Moseley Wealth Management and Moseley Insurance and Financial Services are affiliated companies by common ownership license number OB61811. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refers to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength, claims-paying ability of the issuing carrier. This content is intended for informational and educational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the needs of an individual situation. All hypothetical examples are provided for illustrative purposes only. They do not represent real-life scenarios. Moseley Insurance and Financial Services, nor its agents or representatives, may give tax or legal advice. Individuals should consult with a qualified professional for guidance before making any investment decisions. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. Some of the information provided may be from one or more third parties, which we believe to be reliable sources, but accuracy and completeness cannot be guaranteed by Moseley Insurance and Financial Services.